Here's a startling reality that's reshaping the entire tech landscape. One company has quietly seized more than 1/3 of China's exploding AI cloud market, leaving even tech giants scrambling to catch up. Alibaba Group Holding has achieved something remarkable and perhaps controversial by capturing a commanding 35.8% slice of China's artificial intelligence cloud services market during the first half of this year. To put this dominance into perspective, their market share actually exceeds the combined portions held by their three nearest competitors. That's not just winning, that's market domination on an unprecedented scale. But here's where it gets interesting and potentially controversial. ByteDance's Volcano engine, despite being the powerhouse behind TikTok's global success, managed to secure only 14.8% of the market, landing them in second place. Think about that for a moment. A company that understands viral content and user engagement better than almost anyone else is still trailing significantly behind Alibaba in the AI cloud race. The competition landscape reveals some fascinating dynamics. Huawei Cloud claimed the third position with 13.1% market share, while Tencent Cloud, yes, the same Tencent that dominates social media and gaming across Asia, could only manage 7%. Even more surprising, Baidu Cloud, despite Baidu's long-standing reputation as China's Google, secured merely 6.1% of the market, according to research firm Omdia's latest findings released this Monday. And this is the part most people miss. We're not just talking about today's numbers. The financial projections for this market are absolutely staggering. Omdia's analysts predict that China's AI cloud services sector, which focuses specifically on computing infrastructure designed for generative artificial intelligence tasks, will experience explosive growth. We're looking at more than doubling in size during 2025 alone, jumping from 20.83 billion yuan in 2024 to an estimated 51.8 billion yuan, approximately $7.3 billion next year. But here's where it gets controversial. Can this level of growth be sustainable? And more importantly, is Alibaba's current dominance actually healthy for innovation in the sector? From 2025 through 2030, experts anticipate this market will continue expanding at an aggressive annual rate of 26.8%. That's the kind of growth that creates both incredible opportunities and intense competitive pressures. Alibaba, which happens to own the South China Morning Post, isn't sitting idle on their current success. They're doubling down with massive investments in artificial intelligence and cloud infrastructure development, pursuing what company executives describe as comprehensive full-stack AI capabilities. This strategic approach encompasses their increasingly sophisticated Qwen family of large language models, alongside an extensive ecosystem of cloud servers, containerized services, database solutions, and developer-focused tools. The scope of Alibaba's commitment becomes even more impressive when you consider the numbers behind their expansion. Alibaba Cloud serves as a critical component of the company's ambitious $52 billion capital expenditure pledge announced earlier this year, a financial commitment that's sending ripples throughout China's big tech AI competition. Their global infrastructure footprint is equally remarkable, operating 89 availability zones strategically distributed across 29 regions worldwide. But here's the million-dollar question that nobody seems to be asking. With Alibaba holding such a commanding lead, are we witnessing the emergence of a new monopoly in China's AI cloud space? Or does this dominance actually represent the natural result of superior technology and strategic vision? What's your take on this market consolidation? Do you think Alibaba's dominance will stifle innovation by making it harder for smaller players to compete? Or will it actually accelerate AI development by providing a stable, well-funded platform for advancement? And perhaps more provocatively, should there be concerns about one company controlling such a significant portion of the infrastructure that powers AI development in the world's second largest economy? The answers to these questions could shape not just China's technological future, but influence global AI development for years to come. What do you think? Is this the kind of market leadership we should celebrate, or the beginning of a concentration of power that demands closer scrutiny?